Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Just posting this thing here in the chat room. Hope everybody's having a great day. Like I said, it's one of those mornings or one of those nights last night. It took me a while to fall asleep. Those always like hit me the worst, like the next day to today. Like I'll be yawning all day, just like that. It's only, it's sad when it's 6:15 a.m. and I'm yawning already. It's like, wow. Anyway, let's talk a little bit about the market. So equities are still really firm. The dollar is weak, or, the euro, I sold some euro about 10 pips ago. Not sure if I want to hang on to it though. But I'm kind of thinking Ryan might be right here. We might just stay flat until the Fed. I think I'm going to have to just pull this off here. And I think I'm going to have to pull that wedge out. Just monitor the same positions that we have been monitoring. And like I said, I think Ryan is in the same, or his assessment is probably right going into tomorrow's. We're going to just sit here sideways for a while. And then we're going to figure out what we're going to do following the FOMC. I think that's going to be the more logical way the market's going to move, going into the next couple of days. But let's go ahead and just mark up these levels. So first of all, resistance in the euro. I'm going to. It's going to be 118.40, which is actually 38 or 39 right here. Support is going to be 117.50. We need to keep that on with a bearish bias. I know it's firmed up right now, but it's still very early in the session at the moment too. Let's take a look at the sterling. Sterling's nice bounce back. Actually, we were just trading about 50-60 pips lower not too long ago. Basically when I got up this morning, it was like down here in the 80s, and we've already firmed back up. I think that I know we marked up 138.40 as resistance. I think we have to mark that up again, 138.40, and then also 139 would be resistance. Keep it in a range. And the reason why we need to mark up 139 is this is, I'm going to move this horizontal line. You can see it here. I'm just going to move it right to the highs right there, which is 139.25, but right here. So if we break higher, actually, I'm going to write it up as 139.10. I think that's the correct number. That's going to be resistance, right? On any move up there, that should be resistance. Now, support, pretty clear, I think right now, it's going to be this low right here. I know we dipped today as low as 137.60, but I think we got to give it all the way down to 137.25. So, okay. Let's go into the Aussie. So the Aussie traded pretty heavy this morning, earlier this morning, but then we popped right back up again. So I still think that the 74 big resistance is going to be a 74.20. I have an order to sell there. I don't know if we're going to get there, because when I woke up this morning, when I got in front of the computer, I was actually quite surprised to see the Aussie trading down here at 73.25 without making a probe up into these highs. That doesn't mean that we have to. That doesn't mean that we can't make it up here. I think that the hesitation starting to set in with the Aussie. So I'm going to write down 74 cents, 74.20. It's still bearish while we're below those levels. And obviously support is going to be 72.90, which is that big 161% extension. 72.90. Okay. Kiwi. Rejecting 70 cents. Obviously, these highs here at 70.10 is what we have to write down now because that was the high. So remember, this is a trend line, right? We just probed basically above it, just enough to piss off some people and then came down. But that means that this 70.10 level is now key. Now, I am going to keep us in a range, but support obviously 69.20, but I'm going to actually write this number down for today. See all these spike lows down here? It's not just a coincidence that it's today's low, but we have a spike low from 2 days ago and then spike lows from last week. So this all comes in at 69.45. Okay. Obviously, I think 69.20 is, oops, shoot. There we go. 69.20, which is, you know, this blue line here, as you guys know. Okay. Canadian. So the loonie, you know, I mean, I tweeted this earlier, not specifically referencing the Canadian, but let me talk about that tweet that I put out just a little while ago. And it's the commodity currencies really underperforming. I mean, look, I'm here. Let's do it this way. Okay. Here's the S&P. I'm going to delete this because it's not the main chart that I'm drawing on all the time. But let's just take, I'm really zooming out as much as I can on the daily chart. So you can see 2013 all the way to today, right? So let's compare that with Aussie. And I'm going to put in a new price scale. There's the Aussie, dollar Canadian. Wait, oh, I didn't want to do that. Hold on. I didn't mean to do that with the Kiwi. Let's go back to the S&P. Sorry, my bad. Okay. This is I guess this is a really good, this is a good example. Okay. So let's zoom that out. This is 2019. Okay. So you can kind of see it here. All right. We have the S&P in black, and you can see the Aussie, how basically for the last, well, I mean, you can really say for the last few months from here really has diverged from May, right? And then, I mean, that is, it's not necessarily saying, hey, you know, you should run out, just short the Aussie right now and, you know, short the Canadian dollar. But man, those divergences are really glaring. And so what that really means to us is if the S&P, whenever the S&P pulls back, because I know I've said this for like probably a year, markets will pull back. I know it's easy to believe because we've been doing it for so long. It's so easy to believe that stocks always go up all the time. but it's really not the case, guys. And I know we've seen this unprecedented move in stocks over the last year and a half because of, you know, post-COVID or whatever, and post-COVID lockdowns when, you know, every central bank basically had to, you know, fuel this move. But it's not going to happen, and it's not. I mean, it's not going to be that way forever. I guarantee it. I guarantee it. I can't guarantee much. You know, I can't guarantee you're going to make money. I can't guarantee that you're going to trade better by using ForexAnalytix, or you're going to be a more proficient trader by listening to me. But I can guarantee you this: markets are two-way, and they will be again. Guaranteed. That I'll guarantee you. Okay. So when you see divergences like this on you know, you've got the Aussie and the Kiwi, or Aussie and the Canadian basically, and you can put the Kiwi and you can put in the dollar Mex and dollar Norway, put them all up there if you want and match it up against the S&P. The fact of the matter is they are divergent. And so when the S&P stops going up, you know, hopefully it'll be sooner rather than later, you're going to see these commodity currencies really get smashed, in my opinion. And it's going to be ugly. And I think we have to be prepared for that. And when you take into account like this huge commodity super cycle that we're in, and you see coffee futures doing what they do, lumber, which did what it did before, copper, you know, has made this big, massive move over the last couple of years. Look, when you see all of that, and then you watch the commodity currencies not really respond, you know, it makes you wonder, you know, how viable these moves are. Maybe they just have a lot of catching up to do. But you could have said that for the last 3 months, and, you know, been completely on the wrong side of the market. So it just, in my opinion, it's worth noting. And you know, if for some reason the Fed, you know, starts to get a little bit more hawkish, these commodity currencies are really going to come under pressure come tomorrow. And it's something that I think we all need to be paying pretty close attention to. All right, going back into the chart, sorry. Let's go back into the dollar CAD. So here's the dollar CAD. Dollar CAD's at channel support. Channel support's pretty key, and we're watching these lows right here, which can be 125.20. We have to be bullish while we're at channel support, but we really need to clear 126.10 in order for us to really get the bulls engaged here. You know, every move we make up to 126, it's been rejecting the last couple of days. Benedict in the chat room yesterday was shorting the dollar CAD at 126. I mean, you know, we really have to get above 126.10, and then we should squeeze a little bit, okay? But we get back, if we get below 125.20, we should see 124.60 really quick right here. That 618 should come right into play, maybe even lower than that, okay? Dollar Swiss broke through the triangle lower, so 91 cents, and then resistance now is right here, 92.30 basically. 92.30, support is 91. That's pretty key. We are in range. Okay. US dollar, Norwegian krona, it's holding up really well, especially with crude oil where it's at, stocks where it's at. I thought that maybe there was some economic data overnight in Norway. There wasn't. Tonight we'll have retail sales and household consumption and unemployment, but there was not any data overnight.
The only data that matters is CPI out of Norway. Like that's it.
Yeah, right. Though it just inflation data, I guess, is all that
Yeah.
really matters at this point. You're exactly right.
Their unemployment is like, depending on how you measure, they have a couple of measures like 3-4%, and it just stays there forever. So
thank you very much, Stel. Resistance here at 895. Hey, I was talking a little bit about the commodity currencies, and I mean, you are a Norway bull, and by the way, you played it fabulously in 2020. Is 2021, has the price action shocked you as I'm not going to just say just a Norway bull, but I mean, because you this has been your long time, wanting to play it on the long side. You started buying it, through here, and
yeah,
it's a great trade. But how do you feel about how it's acted all year?
I'm a big time bull, and I was lucky with my last trade, although I got out early. Steve really rode it well, but I'm very surprised with the weakness this year. And that's why I'm not shorting dollar Norway and euro Norway yet, because we haven't really seen, no, not we haven't really, we haven't seen a risk off move. So with the dollar strengthening this year, the krona is underperforming quite badly. And just think about what's going to happen if or when stocks sell off. I don't think we're going to see 12
that's my thought process.
Yeah,
It's like, dude,
I don't think we're ever going to see, I don't want to say ever, but I don't think we're going to see 12 again in dollar Norway. I mean,
no, I don't
ridiculous.
either. But I wouldn't be surprised if we make rip up towards 10 again.
Yes. Yeah, I agree. Anywhere when we have two highs in late 2020, which were 950-ish. If we break through those, I think we're going to 10 quite quickly, and that's where I'm gonna be looking to sell. So yeah, it's been disappointing. I mean, it's been underperforming, but you know what? I don't mind. I want to play it on the short side, so I wanted to underperform, and then we see.
Yeah. All right. Okay. I mean, like I said, and for those people, that are, especially you guys that are newer with Forex Flow, the people there, you guys may not have heard Stelios's opinion. And like I said, on this, and he was a Norway bull. Same with him and Steve, both buying the crown and riding it beautifully over the last in 2021, or 2020. But man, it really has underperformed, and I'm quite surprised at how bad it's been performing. Anyway, I'm going to get back into analysis, and the dollar max right here, resistance, 200-day moving average, spike high, 2025. That should cap us. I know we're writing down 2030, but since the 200-day moving average is there, I'm just going to go ahead and note that. We're going to keep that in range. Dollar yen. Now, I was expecting this yesterday. We might get it today. And even if we stopped here, we could actually, this could end up being a head and shoulder pattern. But you can see, I would probably be looking at this. Shoulder, head, shoulder, right? Now, if you're trying to think about positioning yourself pre FOMC, if you can get long dollar yen right there, at 109.60. Now remember, we marked down, I think, 109.50 yesterday. Let's double check that. 109.60. So let's go ahead and mark that down again. That would complete this head and shoulder pattern, 109.60, and then you get long for a bigger head and shoulder pattern developing. That's the way to play it. And I haven't had a good read on the dollar yen in a while, but that is logical to me, that setup. Okay. Resistance now is, again, 110.65. Dollar index support. We just broke through that support right there, but 92, what's today's low? 92.45. That's the number we have to write down now. 92.45 resistance. Today's high would be 92.81, then 93.20. So I'll write down 92.80, 93.20. Right? Make sure that's correct. 93.20. Yep. Okay. S&P. While we're above 43.80, 43.77, 43, I'll just call it 43.75. Target is 44.40, which is the 127% extension right here. Obviously, we can go higher than that too, especially if you draw out this wedge. We could make a move to 44.70, but oh, look at the Canadian. Looney's spiking higher. Norway's going higher.
Yeah, market's coming off a bit.
Yep. Anyway, so speaking of which, let's continue on. Here is gold, not doing anything. So we're going to write down 1790, resistance 1835. So 1755, 1790, 1835, and we're still in a range. Silver got smacked down today. I'm not really too sure why, but you know, like silver looked all bid and then it just fell earlier. I'm not too sure why that happened, but let's go to the 4-hour chart. So again, resistance here is 25.50, support 24.80. And Bitcoin. So there's some news about like MasterCard, I think, but Amazon denied the news yesterday about them expanding into cryptos. And, we had this conversation yesterday, Stelios. I don't think we need to go back into it. It's going to be hard for people to accept payments on a broader scale with so much volatility and no central bank.
It's not just volatility; it's the capacity of the network. That's a problem.
And transaction,
If you buy stuff off Amazon, sorry to interrupt, buy stuff off Amazon, you usually want quick delivery. Imagine if your payment takes 4 days to process.
Yeah. 44.5 is the 200-day moving average. I'm going to put us in range now after yesterday's move. Have to. And we'll just, we're going to mark up 36,500 because that was the breakout point. And if I'm not mistaken, let's go over to the hourly. We actually went to 36,300. This is after that denial from Amazon. So, if you were trading Bitcoin and you were looking at our bias chart from yesterday, remember we were trading at 40,000 yesterday morning at this time. And you're like, oh, we marked up support as being 36,500. Last night we dropped to 36,300 and we've bounced like a bat out of hell. So if you're just paying attention to these bias charts, guys, you know, they can help. Right, Stel?
Absolutely.
I mean, that's why we do this analysis. So we, you know, now we know that is key. All right. And by the way, US dollar Norwegian krone is bullish. Everything else is, and dollar index.
Have you just changed it? Because I took
oh, sorry. I'm going to keep dollar index just range bound just because.
Okay. Well, let me take a snapshot.
Ahead of the Fed.
I got it.
All right. Thank you. All right. You know, we were talking about this earlier. You know, Stelios has pretty much longer term views, so his views are probably going to be pretty much the same. But tomorrow he's going to probably have some updated comments regarding the FOMC. So, Stelios, do you have anything else you want to add?
Yeah, one thing I want to say, we talked about Norway and how I like being long Norway as a medium term trader. I always try to buy dips. People who follow me will know I feel exactly the same way about metals, and so gold and silver. And they have also been underperforming, and I'm scratching my head because real rates have never been this negative, not even close to being this negative. And they're not breaking out. They should have been, you know, a lot higher. So that's scaring me a little bit. But at the end of the day, you know, their real assets, their monetary metals, they will have more value as inflation picks up. And as yields remain low and real yields remain low or negative. So I just think they're going to be playing catch up. But at the moment, same as the krona, I'm very worried about their movement this year. So, you know, I'm still watching them like a hawk, but
yeah, I mean, if we're seeing this massive inflationary surge, why isn't your typical inflation hedge, why isn't it working for us? And you know, that's the conversation that I had with Bill Baruch you know, a couple of weeks ago regarding gold and Bitcoin. Maybe some of the shine's been taken from gold in the Bitcoin market, but at the same time, I mean, you should see a little bit of a better bid in these precious metals in an inflationary environment. So, you know, I keep going back to maybe the Fed is right and it is just transitory, but you know, it's hard to be able to see that right now. But then again,
the beauty is that even if inflation is transitory and it goes down to 1%, the Fed's balance sheet, the monetary base is expanding at unprecedented pace. That's the inflation I'm talking about. I'm not talking about goods inflation. I'm talking about the expansion of the monetary expansion, which is actually the original definition of inflation. As long as that keeps going, it's mathematics 101. Unless for some reason, you know, they mine an asteroid and bring in 3 trillion tons of gold, then okay, obviously there's going to be a change. But you know,
yeah. And by the way, silver is at new lows, and I don't know why these precious metals just act so crazy.
It is what it is. Yeah.
All right, man. All right. Well, hey guys, have a great one. I'll see you on the daily roundup. That's in a few hours, and if you're in the chat rooms, I'll see you guys in there. Thanks everybody for tuning in. Stelios, thanks for being here. Even though you know, tomorrow we'll talk a little bit more aggressively, a little bit more
aggressively. Yeah, I'm going to be cursing at you tomorrow.
We're going to aggressively be cursing the Fed tomorrow. All right, sounds good. Thanks everybody. Oh wait. By the way, a couple people asked. John said Canadian ripping my Euro Canadian long at least. Okay, maybe an escrow account at Amazon with Bitcoin, maybe. So anyway, Brock. Yeah, that's actually, you know, maybe perhaps it would be. All right, guys, have a good one. Thanks, everybody.